Hello traders, good morning. Good morning. Andy Demmer here from the London Trading Institute. So welcome to another video, guys. Today's focus is going to be on gold. And also we're going to talk about the dollar and how the recent rally is affecting gold and what I think gold could do next. Okay, so both in the short term and in the more medium term. So we can identify areas to trade and or invest. So with that being said, guys, I'm going to get straight to it now. At the bottom of this video in the description, I am going to put some links in there. So if you're not part of our community on Facebook, I do recommend, if you're looking for a place where you can kind of network, to join our Facebook group, the Crypto and FX Traders Club. I'll put a link in the description. I'll also put some link to some extra training if you're quite new to Forex, to gold, to general trading. So you can kind of learn at least the basics and also learn one of my strategies that has a real high win percentage ratio. So check the links out in the description, guys. And also don't forget to hit that like button and subscribe to this channel and hitting the bell notification. So with that all said and done, we can focus on the good stuff right now. So let's get to it, guys. So the first thing I want to say is that right now, the dollar is acting very, very strong. And, if I may just show you firstly what the dollar index looks like, the one that is custom made, right? Which is, essentially looking at the dollar against euro, against sterling, against Aussie, against the Kiwi, against the CAD. And I have an equal weighting. So with the dollar index, if you've used the dollar index before, the standard dollar index, it's not an equal weighting. You've got about 55% of it is all on the euro. I've kind of done it differently. And this is the central picture of the dollar. And you can kind of see the weekly chart here, that on the whole, the dollar has been going up. Okay. And you can kind of see, we've spoken about this in a previous video, but you can see since May 2021, we've been rallying. So the question is, where's this going to get to and what impact does it have on gold? Well, in general, dollar and gold have an inverse relationship. So when the dollar goes up, gold normally goes down. So if you're somebody that trades gold, then you really kind of ought to be looking at the dollar as well. So that's why I have brought the dollar index up, to kind of give you some ideas as to where we might expect the dollar may go to. Now, if you can see here, I've taken the Fibonacci from the high point to this low point here. And if you see this third red line here upwards, well, this is the 61.8% Fibonacci. Now, I can put a little horizontal line just around there so you can kind of see what I'm talking about. And I quite like that area there because we have an old resistance point, an old support point, and it feels like the dollar has got that room to go up there. Okay. Now, let me also do a quick little thing here that I didn't do before we got on. I just want to see if the current Fibonacci sequence, so we have an A, B, C, D, and then this is a new B, this is the new A, so A, B, C, and I really like that a lot because what often happens is when, because the market's been, we had this downtrend here and then we're going up, sometimes the market overextends. So I really like this double area of resistance up here, which matches this zone. So I quite like this, this block here for me looks like a continuation of dollar strength. Now, bear in mind, this is a weekly chart. So things don't happen in a straight line. You can see that markets do pull back. So don't think, dollar's just going up in a straight line. Now, with that background, I want to go back to focusing on gold. Okay, so if I bring in the chart of gold, this is what gold looks like. And it's quite interesting because, you can see as the dollar's going up now, gold is pulling back. And you might think, well, okay, where's it going to go to? So I like to look at responsive areas. And the first thing I can see is I do like that zone there. You can see really clearly the market has a lot of interest there, and that comes in at 1835. Now, if we were to break that, then I think we can go quite a bit lower, okay? But and I showed that last time. I think we were talking about it going all the way back down to here. So we're not going to get into that right now. All I will say is like, you can kind of draw your kind of long-term trend lines, and you can see that that trend line is quite a distance away. I mean, you've got that 200 weekly there as well coming in. But for now, I just want to focus on the kind of short to medium term, which is I think that this area here will have some demand, and I think that's a good area to kind of look out for around 1838. And if we I always like to see, where is the 61.8% in all of this? Because that's the thing, that's the Fibonacci level that the market likes to target. So if we quickly do that, we've got our A, B, C, and we had an overshoot there, first being the first swing. You've got your new AB right there. And the 61.8 comes right there, which is around very, very close to this green line, you might agree. So I like this area here as a potential target, which is 1857 down to 1837. Now, I want to show you something, because short term, I am bullish. Why? Because on the 4-hour time frame, you can see that there's a cluster of demand here. You can see lots of price action. The market likes to bounce here, and we do have a Fibonacci D here. So this is basically, this is your first swing, A, B, and we've created that low point there. Slight overextension, but basically this here is our new B. And often the market will go back to at least its 38%, which comes in really nicely at a key level. So I think target number one looks to me to be around 1914 short term. And then target number two would be here for me, the 61.8, coming in around 1931. So I am bullish short term, but I do expect the sellers to kind of step in. I think if the market was to kind of go back into this zone here, I think that kind of lines up nicely with these moving averages, and it's a decent level to then be looking for the next lower leg down. If that was to happen, guys, then, potentially you're looking at this area here, 1618, which is 1847. If we go back to what the higher time frame, you can see 1847 is right bang into this weekly level. So everything seems to be lining up perfectly for these moves. So short term, very simply, I am going to be bullish, and then I'm going to be looking for the next leg down towards here, in which case I think demand will come in. I think we can definitely look at potentially looking at this area. You can see there's a little resistance point there on the daily as well. I think then the market will then push up. Okay, so up and then down and then up, and then we'll kind of see. So lots of opportunities there to make some short-term gains. All right, guys, that is what I'm looking at on gold. That's my viewpoint. Obviously, do your own research, follow your own rules, follow your own plan, but hopefully that gives you a nice insight. Definitely keep an eye on the dollar, guys, because it does have that inverse relationship, and gold does act as that inflation hedge. Hope you enjoyed that, guys. Comment below. Let me know what you think. What do you think gold's going to do? Do you like the analysis? Do you agree with it? If you disagree with it, I'm absolutely fine with that. That's what makes the markets, by the way, guys. We're not here to prove that we're right or you're wrong. It's just a case of that's how I see the markets. That's my analysis, and we're using the tools that I use. That's all for now, guys. Have a good one. Don't forget to hit that like button. I really appreciate it. We'll see you soon. Take care, guys.